So, hello everyone. Hello. We are continuing with our traditional webinar series, and today we are here, Asse and myself, and the topic is Fiat Currency versus Bitcoin. Why is Bitcoin future so bright? So, not that we speak only about Bitcoin, but we look about Bitcoin in the context of how the monetary systems actually work. So, and because this will make many questions so much more easily understandable. Okay, let's start with intro of Asse. Asse, would you like to say some words about you?
Sure. Thank you for having me here and welcome everyone. My name is Asse Sauga and I'm co-founder of Estonian Crypto-Association, and most of my background has been in IT services and development over 12 years. And last 6 years I've been really active and passionate in the blockchain field. I am currently a board member of Chains Invest, which is doing the mobile app for the investment and the crypto cards, issuing the crypto card. Then I'm author of a book, The Bitcoin Way, which is really a great introduction into the cryptocurrencies, blockchain, and Bitcoin. It's available on Amazon in Kindle book and the paperback. And it's a really simple introduction, as it was edited by the musician who didn't know much about Bitcoin. So she did a great work with that. And as well, I'm investor, coach, advisor, and consultant. And same time with this grounded rational world, I'm always walked spiritual path as well to hold the balance between the different parts of the different sides of the brains. So I'm now walking and guiding as well the spiritual paths together with Modern Mystery School. And over to you.
Okay, thank you. And my intro, I'm co-founder and CEO of SmartCredit.io. I worked 10 years here at Zurich as a VP, Vice President for Credit Suisse. So I know banking inside out. But before banking, I spent quite some time in the startup industry, and there are still 4 successful products from me, and the Smart Credit, that will be the next one. So let's think on the same impact which we had with the previous products, and even a little bit bigger impact. Now, we are doing our seminars and the webinars, seminars, and we're doing them always Sundays, 15:00 Central European Time. So it's 16:00 in Estonia, 16:00 Eastern European Time, but 15:00 then Central European Time. And we have done pretty much about the topics like what is happening with the Bitcoin now in the coronavirus environment, like where to invest now in this environment. If you're comparing it to other financial crashes, the current crash. And so we're doing on several topics, and all these topics, they are then related to it's crypto, it's economy, it's a financial system. And we continue with these webinars every Sunday. Okay, let's move on then to today's questions. So today's questions is then what makes Bitcoin so special in the context of the traditional monetary systems. So first we will look now, how does monetary system work? And how did monetary systems work actually in the past? So what we had here in the past. And then is, of course, this key issue. There's a big blue elephant, no one is talking. What are the key issues with the current fiat system? So let's speak a little bit about this. And then we go over to the Bitcoin. So how does Bitcoin work? How can benefits of Bitcoin? And could there be a Bitcoin-based monetary system? Now, you can always submit questions via the chat, and then we'll go through the presentations, first me, then Asse, and then we will focus on your questions, and we'll do recording, we'll put it on YouTube, we share it and via Twitter and Telegrams. Okay, now let's start now. How does monetary system work? Okay, first let's say about these things. Okay, this image, this old stone, this is the This is the oldest monetary artifact. It's from Mesopotamia. So in every monetary system, we have a base money and a credit money. And 5,000 years ago, Mesopotamia, that's the Euphrat and this area, they used grain as a base money. So it was a commodity-based base money. And they had as well a credit money. So it was already 5,000 years ago. So that means many answers to what is the solution is actually there if you look in the past. Now, let's see how does the monetary system actually work. Every monetary system now in the last 5,000 years, there is the same pattern. Okay, every monetary system which survived, let's say, longer than one generation, like one human generation, there's always base money. So base money has been commodities, it has been gold, it has been silver, it has been like the coins from the sovereign minted, and now we're in the today's fiat system. The base money is created by the central banks. So, but there have been different types of base money. Then in every monetary system, in last 5,000 years, in every system which lasted longer than one human generation, we had as well a credit money. So we look on the next slides what the credit money is. And the big difference has been, is this credit money created centrally, like we have now the system, central credit money system, or is it a decentrally created, decentral credit system, decentral credit money system? Okay. And okay, let's recap as well these things. So what is the role of the commercial banks? So how is money created? So like I said, base money that's created then from the central banks. And we have a credit money. So all the money that you have in your bank accounts is actually credit money. It's created via the lending. The banks are creating money via the lending. Every time when banks issue a new loan, new money is created. New credit money is created. Every time when um, the borrower is paying back the loan, then the credit money is destroyed. And so we have continuous credit money creation and destruction. So credit money amount is highly volatile. So and the base money amount is more constant. Now, but the important thing, it's continuously created and destroyed in a current system by commercial banks. And it's 90% of the total money that we are using. Okay. Now, when commercial banks are creating the loans, what are they actually doing? Uh, what are commercial banks doing? And actually, it's something very simple. We don't need to speak about this special investment banking or other things. This is lending, and lending gives the main profits to the commercial banks. What do? They create and destroy money in the lending process, like previous slide. When loan is issued, money is created. When loan is paid back, the money is destroyed. Now, banks are as well protecting money with the reserves. There are always loss provisions and reserves of the banks to protect these loans, meaning freshly created money. There are credit ratings and there's legal enforcement. That's practically what the banks are doing in the lending. And this is kind of been the system like as well for the most of the human history. Now, let's look down these different types of the monetary systems that we have. Okay, we have now the fiat system. I was putting here the beginning of the system as a 1944, like a Bretton Woods, but there are as well different subphases of a current fiat system. Now, the key to this fiat system that we have central banks, which create the base money. On the left, we see the Federal Reserve. The Federal Reserve has now, the latest numbers are $6.6 trillion base money created. We'll look later on the graphs about the money growth of Federal Reserve. And as well, for example, ECB, European Central Bank, creating as well a bunch of base money. And on top of this, we have a central credit money. Why are we calling it a central credit money? Because it's created by the independent commercial banks. So why is it that central? It's very simple. Because behind these independent banks, there is a central concept how this credit money is created. There is a central insurance for this credit money, and there's all this central banking behind this credit money. So that's why we are calling it a central credit money. That's the system where we are now. We look later now, that's the weaknesses of this system, why fiat system will near to the end. So, but before we go there, let's look a little bit how did it work in the past. So we had 4 major monetary phases. Now, before this central banking area, okay, I was putting 1913 here, like when the Federal Reserve was created. We had like, it was a different system. Now, if you look on the upper level, there was as well a credit money. But the key to this is, this credit money, it was not centralized credit money. This credit money was created by the individual commercial banks. Every commercial bank created their own credit money. So, and people could use this one, which they trusted the most. Now, at the same time, that was very important at this time, the phase in economical development, the base money was the gold. So, there was a credit money, not centralized, but created by the individual commercial banks, and there was a base money, non-manipulatable, or current base money is manipulatable. The Federal Reserve can increase the amount of base money as much as they want. You cannot increase the amount of the gold. And that's how it worked before the fiat. And we'll look later on what is in the solution, but already gives a little indications that the base money should not be manipulatable, the amount of the base money. Of course, there's a credit money too. Now, let's go a little bit more in the past. Now, how did it then work before the commercial banks emerged? Because the monetary system existed as well then. So, okay, we had multiple subphases here, but let's simplify. We had sovereigns, we had the kings, queens, and they minted their own money, their own coins. And there was a decentrally created credit money. So credit money was not created by the banks, but it was created in decentral transactions. So decentral credit money is thousands of years old, actually more than 4,000 years old. Now the incarnations of credit money, which we saw on the previous slides, they are very young. But what was in the flaw in this system, what we look now on this slide, is that the sovereigns created the money, the base money. And at the beginning, this base money was always gold. But then it started, the famous story like with the Roman Empire, it was a penny on a gold, then it became a silver, then it became a copper, a mix of silver, copper, gold. And so this was this continuous devaluation of the base money. And what we see here, if the base money can be manipulated by continuous devaluation, it will just destroy the world. We'll see it later what it means. However, what was interesting in this phase, that the credit money existed as well. And the credit money as such, it was created decentrally. Not like we looked on the previous slides, central credit money, or not like credit money which was created by individual banks, but it was two individuals who were borrowing, lending, and these loan obligations, they were used as a money. So someone's obligations to pay was used as a money money to pay the next parties. Particularly these obligations of obligations to pay, they were the bearer notes. So, and the bearer note means the person, the borrower who borrowed the money, had to pay the base money to the person who represented, who gave him the bearer note, because that was his signature. Now, let's go a little bit more back in the history. Like we say, credit money, base money, they are 5,000 years old. Now, how was it before sovereigns created the base money? And now we see a very interesting solution. The commodities were used as a base money. So gold, silver, wheat. Why? Because the amount of the commodities is not manipulatable, like what we have in the today's Federal Reserve and ECB, where the Federal Reserve can just increase by their own will the amount of base money significantly. We'll see on the next slides. Now, the interesting this phase was as well decentrally created credit money. So the credit money was created in decentral borrowing lending transactions. This image, which we looked at on the beginning of the presentation, from Mesopotamia, the oldest artifact of the credit money, this image, it's 5,000 years old, was created in a decentral borrowing and lending transaction, and it was used as credit money. So why we are showing these incarnations, different incarnations of the monetary systems, like the 4 key incarnations? Why 4? Because we have base monies. Base money can be manipulatable or non-manipulatable. And then we on the top we have credit money, can be then created rather more central mode or in the decentral mode. And then we are getting these 4 key incarnations that we have. Okay, let's move on. Of course, we are here in the crypto world, so we'll look on this a little bit later. So last 5,000 years we had the credit money. So what will happen in the crypto? So let's see. Okay, now let's get here to the issues that we have. What is then the issues within our current monetary system? Like say, if you have 2 parts, there's a base money, there's a credit money. Let's start with the base money. Before Federal Reserve was created, the gold was the base money. The same for the European central banks, and even the initial years of the European national central banks, not European central bank. The gold was the base money. 1971, the connectivity gold, the base money was taken away, and the Federal Reserve was free to create as much base money as they wanted. The same for the ECB. We see now the coronavirus crisis. The Federal Reserve has created in 2 months like 2.2 trillion new base money in 2 months, meaning from 4 trillion base money to 6.6. Actually, it's not 6.4, it's 6.6 at the moment. It was not possible before. Now, what does the base money, continuous base money creation mean? Creation imply it means that the wealth is taken away from the people, because if you increase the amount of the money but the real assets are the same amount, it means that the real asset prices are increasing. People have to pay more for the real assets, but where did people receive the money? For the salaries or for them savings, meaning salaries and savings of people will continuously be worth less and less. The prices of real assets, they will grow. Okay, Federal Reserve balance sheet. Now, how do we know that this current monetary system doesn't work? Let's think now on gold as well. And the gold has been one of the base monies for 5,000 years. Of course, there are some people who are saying that the gold doesn't have any future, gold doesn't pay any dividend, and so on and so on. Warren Buffett and the club, they're speaking all of these things. All central bankers are speaking all of this. But they do not like to see this graph here. This graphics, it shows major currencies priced in the gold. It shows how much has the value of any major currency now in the last 50 years declined versus the gold. It's like a 95 to 98% declined against the gold. Why? Because of continuous monetary expansion, because of monetary expansion of the base money and monetary expansion of the credit money. Now let's go to the next slide. And this is now a little bit bigger time frame. We see that from beginning of 1900, how different fiat different, not always fiat, but as well different currencies have disappeared. We see as well a big spike down, a big fall, like around 1917. That was this famous the gold decoupling, the last gold decoupling that existed. By then it was a US dollar gold decoupling. So there's a monetary depreciation. Money is losing value. Why? Because there's always more and more money. And now, just to finalize my part of this conversation here, what are then the flaws in our current system? 3 flaws. This shows as well how to fix our current monetary system. The first one, the amount of base money is manipulated by the central banks. I showed you the graph of the graphics of Federal Reserve. In 2 months, 50% increase. Or you may think as well on Swiss National Bank. In 11 years, 1200% increase in 11 years. Okay, ECB as well, factor 4, 5, we don't know, I don't know it exactly, but continuous amount of base money increase. And second floor, before central banking area like 1913 and so on, there was always clear separation between the base money and the credit money. It was clear, I'm using base money, okay, this is from my savings, it was on gold. Or I'm using credit money. So credit money was temporary, convertible to the gold. Now, at the moment, we don't have a clear separation. People even don't know that something like a concept like a base money and a credit money existed for thousands of years. For them, it's just a concept called money. And the third flaw in the current system, there's no convertibility of a credit money into the base money. Now, if we would have these things that any credit money, which is created via the lending process, can be converted at any time, like it was in 1933 in the United States. It can be converted at any time to base money, which was then gold. This would limit automatically the amount of a credit money creation. So by introducing a system where we have a clear separation, base money and credit money, and we have a clear conversion of credit money to base money at any time moment, we are limiting these excesses which are happening now in our current fiat system. Okay, now from this, now let's go over to Bitcoin, and yes, I will, Asse, I would now hand over to you. Let's do it so. I will stop sharing, and you will then share your screen. Okay.
Yes. Can you see it?
Yes.
Perfect. So basically, what's happening there regarding the base money creation? It's called printing money, and we have done it now quite a lot, and it shows that it goes into the wrong direction. It's not sustainable way, so maybe it's time for a plan B. And let's see. Then, yeah, what might be the plan B? It's called Bitcoin in one alternative, and I'm gonna explain really briefly how
Asse, wait.
Yes.
I cannot see your screen at the moment. Did you
Really?
Did you share it?
Okay. Let me check. Okay. I can
Yes.
go to
Now
the
we can see it.
full.
Probably
Yeah.
have two
Okay.
screens. Okay, that's okay. You can stay on this mode.
Okay. So yeah, it's time for plan B. It's called Bitcoin, or one alternative. And I'm gonna talk about briefly what Bitcoin is, what is under the hood, how does it work, and then what are the benefits, and then we'll discuss how the future might seem. Like, is it possible to create a new monetary system, global system based on Bitcoin? So how the Bitcoin has been built, that the main idea is it created back on 2008, and the biggest motivation was that how to solve the problem of centralization of the money creation, because the centralization is one of the biggest flaws, because it allows to do the manipulation like we have seen. And the decentralization means that there is one or couple of people who can make the decisions which influences the whole system, like globally. But there is, as I'm involved in psychology, I know that the human is not very, let's say, not very, most secure. Human ego is not most secure tool to make the right decisions always. It can be manipulated. It has emotions and everything. So much, much better could be to make decisions based on mathematics. And Torrent was the first really working decentralized system which allowed us to exchange big files like movies and music, and it has been worked now over 20 years and still working really well. So the first idea is to create a monetary system which cannot be manipulated, which doesn't have the central point of failure, so-called. And then the question was how to build it. And then came the idea that let's structure the data into the blockchain. The blockchain wasn't in that time new idea. The blockchains have been built since early 90s. But blockchain is just like a specific way how to structure the data into the database. And the idea is to put the data into the blocks, into the time windows, so-called. So that was done. And the next question was how to update the database, how to add new blocks into the existing blockchain. And this is the biggest innovation in Bitcoin and in blockchain, which made it really successful, and it's called proof of work. And here here is the picture which is proof of work as well, but this proof of work, this goal of that proof of work is to make a difference who is fulfilling the form. Is it the robot behind it, or is it a real human? In Bitcoin, the proof of work is a much different goal. And all this system has been built based on the hash algorithms, which are really common technology and all around the internet since 1970s. And goal is that all our passwords are held on the hash, cryptographic hash, and we are using it every day. It's so common base technology all around the internet that we can't. It's basically proved system, but I'm not going to go more deeper into that because we don't have so much time. So let's zoom into the blockchain. As I said, it's a specific way to structure data in database, and the main goal is to assure integrity of the data and the history of the data. There are three different kind of blockchains: the centralized one, which is permissioned usually, and the decentralized one, which is permissionless, and some hybrid blockchains as well, which are combined with with another. And here you can see what data is held inside the block. So the blocks are mathematically connected to each other. The next block will be based on the previous block, and it consists of hash of the optimized control mathematical data of the previous block, which is makes it linked. Then it consists again hashed or optimized data about real-time transactions, which every miner are monitoring in real time, and nonce number, which is needed for the mining process. And let's see now how this proof of work works. So the proof of work is needed only in a decentralized blockchain. It's not needed for the centralized blockchain. And it's many, like blockchain is quite like a hype word, and many companies implementing blockchain into their business and everything, and they are talking about mining and proof of work as well. But it's really a control question, kind of, that if blockchain is using proof of work, but it's still centralized and supporting the like common business model, then this is like red alert, because proof of work is only needed for open sourced and decentralized, fully decentralized blockchain. And why? Because it's basically so far most secure and only way how to reach to the consensus in a decentralized manner with an unknown parties. And it makes it much more, the flaws of proof of work is that it makes it much slower and quite expensive. So that's why it's not reasonable to use it in a centralized blockchain. It's only for a decentralized one. And what it does, it assures the security and trust, exactly, in decentralized blockchain, and as well it solves the transaction double spend problem, which is basically that assures that I can't spend same money twice, or I can't do the same transaction twice. And it creates a new base money as well. It involves the emitting of the money, emitting of the new Bitcoins into the network. And let's go over the graph here. So before the miners can participate in the mining process, before they have to synchronize the whole blockchain, they have to download the whole blockchain so that they will have the whole database there in their hard drive. And then they will monitor the network, all the transactions which are happening real time. This is the point one, and they're validating the transactions. Their transactions are mathematically related to each other as well. They will take the bunch of transactions and put it into the block and add into it the header of the cryptographical hash data of the recent block, and then add it into its formula, the puzzle. They basically they have to solve the puzzle, which is known for every participant in the network. Only that the solution it's not known. Only that the pattern of the solution is known. So they will try to solve the puzzle, and it might take a time. Usually, the difficulty of the puzzle will be calculated based on how many miners are trying to solve the puzzle, and so it happens like billions of times in a second. And eventually, when one of the miners thinks that he have found the solution for the puzzle, then he will send out his proposal that I have found it, please check it. He will send it out to all the other miners, and all the other miners around the network will control it, will check the solution. This goes really fast compared to the finding the solution. And that's the consensus part now. When 51% of the network have agreed that yes, this miner have found this 10 minutes solution, this block solution, then they all agree that that this is the right guy. He haven't tried to fraud the system, and they will agree that this guy will found the right block. The right block will be added into the existing blockchain, and the miner who is a winner will get a new amount of bitcoins, which is currently 12.5 bitcoins. And this cycle begins now again. The miners will take a new transactions and starting to whole cycle again, finding the next block. And now the new money creation, how here goes. So that's why it's called mining, because it's related to the money emitting or the new money creation. So approximately in every 10 minutes will be emitted new bitcoins into the network according to the next rules. It started at the beginning in 2009 on 3rd of January. It started with 50 bitcoins, and into the code it is fixed. It is put the rule that it will be halved approximately every 4 years. So today the reward is 12.5 new bitcoins, and it will be given to a particular block winner in which happens approximately every 10 minutes. And so it was 50 bitcoins somewhere in 2013. I think it was 25, and 2016 I think it was 12.5, and now 12th of May it will be halved again, going to 6.25 new bitcoins. And therefore it's possible to calculate, as we know, that the smallest fraction of the bitcoin is 1 divided 100 million. So 100 million of bitcoin, 100 million satoshis will equals 1 bitcoin. Therefore it's possible to calculate that approximately year 2140 will be mined last satoshi, last fraction of the bitcoin, and then we will have altogether 21 million bitcoins available in the network for usage. So this is whole fixed emitting logic, how a new base money or how money is have been or will be created or have been created into the Bitcoin, and how and it's really innovative way how to distribute the money, because distribution logic or distribution is always challenged as well if the new money is created into the network. And how here the distribution goes, that if the miner will get the new bitcoins from the network, it will be just generated. Then as the miner have to pay for the electricity and maybe loan for the hardware, and he has investments to cover, then probably he will sell the new bitcoins in the market. So every new bitcoin reached to the market quite fast, and again quite distributed way, because the miners, that we have many different miners, and it's not predictable who will win the next reward. It's like there is quite a big gaming factor included into the whole process. So it's really, in my opinion, it's really beautifully done distribution logic. And about the money, that the more equal the distribution is, the stronger the money is in the network. So let's look into the benefits of Bitcoin compared to fiat. First of all, of course, it's decentralized. And from that point, all the other are kind of related into the decentralization. It's kind of like basis. The many other features are depending on that decentralization. So as it is decentralized, it is much more secure, as there is no central point of failure. A central point of failure can be failure in two ways. When the attack comes from inside, this is called manipulation or corruption. And when the attack comes from outside, it's called hacking. And both ways, the central point is the weakest part of the whole system. In a decentralized system, there is no this weak part. Of course, it's not ideal. There are definitely different weak points, but it's much harder to find them, and it's much harder to attack and manipulate the decentralized system. And it's censorship resistance, which means that there is no way how a third party can influence or interference the transactions between the parties, because there isn't a third party actually. There is only peer-to-peer transactions. Then it's, of course, it's open for everyone. So everyone can, as long as you have internet, you can just download the wallet, or you can download the mining software, and you can go into the network, download the database, and verify, participate in the verifying of the transactions, as long as you will agree the rules which are there since the early beginning and which are transparent. Everyone can check it, and this comes to the next point, which is that code is open sourced. So all the parties or the actors who can understand the code, I think in the world are over like 1-2 million developers who can read the code, who can understand it, and the people who doesn't know the code can rely on those 1 or 2 million of people who can read the code. Basically, it means that the rules, how it's working under the hood, how the code is working, it's verifiable for everyone, basically. Neutrality, again, really important part. Bitcoin network doesn't care, are you sending like half of Bitcoin from New York to Rwanda, or are you sending to 200,000 Bitcoins from one country to another country? So everyone are equal there, and everyone has a right to do the transactions. Borderless, again, it's working 24/7. The markets are working 24/7. Again, the first time in human history we have basically 24/7 always access globally to the liquidity and to the monetary system through the cryptocurrencies. It doesn't care where and to where are you making the transactions. And programmable, again, first time in history we have programmable money, which is a huge improvement regarding the sending values. You can define different rules in which conditions you can or send the money. You can accept the money, or you can relate the money transactions with the different applications. You can add the conditions, the smart contracts or the new way how to transact with the value there. And the possibilities are endless there, basically, what you can do with the programmable money. Of course, it's way cheaper to transact, even cheaper than TransferWise and other service providers. And it doesn't matter from where to where. It's how big is a transaction fee. It depends on how fast you would like to get your transaction confirmed. And it's way more sustainable in a way that, yes, there are improvements in the mining part, which is well, the mining takes quite a lot of energy. That's for sure. But again, if we can use the energy from the renewable resources, for example, just to assure the security of the network, then it's quite fair trade. And always there will be improvements. The algorithms, the mining algorithms will be improved, and it goes in the more like there will be more optimized solutions, and the most important part is that we have now proved that it is possible to build decentralized money system, which is actually most securest network we can say about the Bitcoin. It has been survived quite a lot of very different attacks all around the world. And but again, about the sustainability, I mean that compared with the fiat, as it is open for everyone, that everyone can contribute into the code. Basically, everyone can put energy into it, can put a lot of effort into, can participate in building that. Then, as we see at the moment already, that there is a huge amount of knowledge base what have been went into the new money technology, into the cryptocurrency technology, and to build a new software around it. The ecosystem is growing really fast, and compared with fiat, where like I don't know, last 40 years, only innovation what have had is like ATM and now now mobile apps. There is no much innovation there. And actually the biggest innovation maybe in the banking, in the fiat, has been happened in the last 5 years, and that is mostly because of the huge push from the cryptocurrency side. Banks have been realized that, well, we have been in a huge comfort zone, we have to do something about it maybe. So about that, I mean the sustainable, that it's like growing from bottom to up, and it's really a community thing. So yeah, now to the last question, or maybe the open chat that could be there, Bitcoin-based monetary system. My answer is definitely yes. Just it's an open, which will be the best way to do it.
Okay, now let's go to the questions that we have here on the chat. Okay, the first question: should Bitcoin be the new system or enhancement for gold-backed currencies? What Ally Divide calls the smaller pieces. Like we look now how the Bitcoin is working technically. we look now how the different monetary systems existed in the past. So now, and we looked what are the flaws in our existing system. Now, the key flaw that the base money can be manipulated. This is our last 100 years. The amount of base money is manipulatable, and we look again, 50% base money growth by Federal Reserve in 2 months only. So that means it would be, of course, very nice if the new monetary system is based on the Bitcoin only. Now, I will accept as a compromise as well, like if it's an other non-manipulatable asset, like a gold beside, but the key is to have this non-manipulatable assets as a base money. And the second, on top of this, there has to be clear separation of a credit money, which we don't have at the moment, plus the convertibility of a credit money back into the base money. And then we will see what the real interest rate of the base money will be. Asse, what would you say here? Your comments?
You mean the Andrea demo question, right?
Yes.
Yeah. I think, yeah, there are already gold-backed tokens have made quite many different, but in my opinion, I would see Bitcoin as a way much stronger base money than the gold kind of based money, because the gold is gold emitting logic is in a way quite manipulated as well. There are a few companies who are owning the gold mines in all around the globe, and so that base money creation isn't the best as well. And I agree, Bitcoin has his own cons as well, but still I see that the Bitcoin has as a base money has a brighter future than the gold, but probably they will exist both in quite a long time. They will maybe they will benefit from each other maybe sometime.
Okay, then let's take the second question. I will read it here. What will happen when last Bitcoin is mined? Does it mean it won't be monetary anymore, but an asset in the future? Okay, let's think again. Let's reflect a little bit back. What does every monetary system need? The monetary system will need a base money, and it will, to be sustainable, that means longer than one generation, one human generation, it needs as well base money which cannot be manipulated. Okay, let's get to this theoretical scenario that there will no more Bitcoins mined. That's okay. This means that the base money, the value of base money will be continuously growing. Now, if you go back in the history, 1850 till 1910, United States, this was the time when the middle class was created. But this was as well the time when the base money was a gold. And this was the time when the middle class got every day richer and richer, because when they made savings, they couldn't buy more and more other commodities for the gold. So that means the key is not, is Bitcoin mined, or will there be more Bitcoins mined or not? The key is the base money has to be non-manipulatable. Okay, also, and I ask your comments too.
I'm not sure do I understand the question right, but it definitely it is still money. And if you mean here the question that how does it work when all the Bitcoins have mined and the new Bitcoins will not be added anymore in the network, then how the miners, there is no reward anymore, and then the fees will be there, anyway there, and the system is going to work anyway. Just there is then the fixed amount of Bitcoins in the network, and yeah, it will work anyway.
Okay, let's go to the questions. Now, the next question is: the Bitcoin truly decentralized with only 19 mining pools, and is it like energy effective? Okay, my preference personally would be to have more than 19 mining pools, but I'm happy that there is a competition to the existing base money, central banking base money. Regarding energy efficiency, okay, I worked for Credit Suisse 10 years in Zurich. Now, you have to imagine that IT centers, which are Credit Suisse and every other bank has, they have been duplicated, they're triplicated, there are multiple versions there. There are huge building of these IT centers. Now, I'm afraid that if you're looking on existing money, and there are, I think in Europe, there are 7,000 banks, worldwide 23,000 banks. And if you're looking on the energy efficiency on existing monetary system, so I think it's a little bit less than Bitcoin. Of course, Bitcoin requires energy, but I think the alternative requires more energy. Okay, Asse, your comments here on the third question?
It's a great question. Well, the question between the decentralized and centralized one, it's not so like kind of black and white. There is always like kind of harmony between those two. You can't build probably like fully decentralized system and fully centralized system. There is always like gray areas there, and the areas are changing. And yes, I agree that the amount of decentralization of the Bitcoin network was at the beginning way higher than today. Today it's much more decentralized than it was at the beginning, but still it's much more decentralized than the fiat system. And as the interest parties have a huge stake on it, there is not interest to break it somehow. So there are different measures taking in to assure that still the mining network will be enough organized enough, decentralized way that there is minimized happening the event of somebody becoming the central point of failure there. And about the mining and environment, yes, again, it's not ideal, but currently it's the best what we have, and improvements have been made there and will be made. And always it's a question from where you will take the energy. The cool thing about the mining is that it doesn't need a fast internet connection. It just needs an energy, so electric energy. So you can install there are mining farms in a container-based mining farms. What you can install on the beside of the solar farm or the hydroelectrical plant, and so they have done it quite a lot, and so you can use really well reusable energy there. And another good point of doing it is that you can you can in the case of energy plants, there is always this supply-demand graph that when the electricity network is demanding in the daytime huge amounts of energy and the nighttime less amount of energy, then it's not easy from energy plant to fit into those patterns, into the electricity demand patterns, and how you can easily, again, the first time, how you can really easily to stabilize and same time way faster reach to the profit with your energy plant investments is that you will install mining farms close to your energy plant, and you can earn extra amount of money when the network electricity network demand is low. So that's another really great option to use it in a sustainable way.
Also, we are running a little bit over the time, like 60 minutes already. So let's go through the next questions as well.
Yep.
Okay, next question: can Bitcoin ecosystem be successful without crypto credit money? And the second part: what would be sustainable Bitcoin interest rate? Okay, now Bitcoin ecosystem without crypto credit money. Now, every monetary system needs credit money. A monetary system without credit money does not survive for very long. There is a reason for this. We have no time to explain it. We can make one more webinar about this. So that means if Bitcoin wants to become a real monetary system, so as they exist for the last 5,000 years, we will need a crypto credit money on top of Bitcoin. So it needs to be done. Then related, and what could be sustainable Bitcoin interest rate? Now let's think that the mining will stop. Then on one day we don't have the mining. Then the Bitcoin interest rate sustainable, it should be the base interest rate, meaning risk-free interest rate. It should be as much as the GDP growth. Like a GDP growth, okay, let's assume everything is constant, but just some based of innovation, then it will grow like a 2% per every year. So this would be the base rate of the Bitcoin after the mining. After the mining, after there is no more new Bitcoins mined. So 2%, so that it keeps then the GDP growth, the current GDP growth, which is then based on the production growth. Okay, Asse, your comments?
Yeah, I will be fast now on that one. So to the first question, no, credit money is needed. And to the second question, Martin answered really beautifully.
Now, Asse, the next question, maybe you will take it because you know it a little bit better.
Let's see, can Bitcoin allows to change decimal amount from 8 to more, or it needs new chain for that? Bitcoin design flaws can be overcome, like storage, heavy blockchain, and slow block time, or Bitcoin will be just prototype idea and will be replaced with better designed coin. The first part, decimal amounts from 8 to more, no, you can't. Well, okay, you can change, but you have to reach to the consensus of the whole network, and it's really hard to reach that consensus. It's basically easier is to create a new network because it has to be interest of in the whole party, and it might harm the security and the trust of the whole network because it's meant to be craved in the rock. So everything is possible to change, but only if you manage to reach to the consensus of the whole network. So basically, it's impossible, depending on the rules. But like so hard rules, it's not thinkable probably. And other question, other part. Again, you have to go to the basis of the Bitcoin design, and again, it's not probably doable. The easiest is to create a new blockchain, new coin, which have been done many times. There are over 5,000 coins around there, and the Bitcoin doesn't have to be ideal. Bitcoin, we will move into the world. We will have many different money platforms with the different functionalities, which are all integrated to each other really easily, but they will have different best functions and the features for which are fitting best to their goals.
Okay,
So there,
we are now 65 minutes, so let's go now over the next questions. So let's say currently focused. Now the comment here worldwide there are 40,000 banks. Yes, there are 40,000 banks, meaning and to more reflection to this energy consumption of the existing banking sector, which is huge. Now, then the question about the Bitcoin here, how programmable is Bitcoin itself? Let's say the beauty of the Bitcoin is as well to add the sidechain concept. To use a Bitcoin as a core chain and to add the side chains. Let's think of a Blockstream, let's think of the Elements project, and to extend the network and to have the most high secure network that we can. It's true, it is not so programmable itself. The miners have to accept the changes, but then the idea is then the extensibility. Okay, Asse, your short comments?
Yeah, Ethereum is way much more programmable than Bitcoin. Bitcoin just supports easy scripts, but yes, like Martin said, it's great to use it as an like base. Yeah, great to extend other networks on Lightning Network, for example. Yeah.
Okay, then we have a comment here about the environment impact of the fiat money, so which is a very high. So, and then we have a question here, that comment here that if you have more questions, then please go on the Telegram channel. Okay, I think it's very good. Please come to Twitter. Please come to Telegram channel. So we are a little bit over time today, so doesn't matter. We will put the recording now on the YouTube. We will share it. So very many thanks for listening in. Very many thanks for participating with questions. Also, your words.
Yes, thank you, Martin, and thank you everyone who participate and listen to us, and yeah,